Hello everyone, my name is Saad and welcome to BISP Solution. So our today's topic is change in ownership, which means substitution to associate or substitution to equity method. So first let's understand managing consolidation method. So in order to provide for advanced consolidation and elimination, various parameters must be established for entity in the entity dimension in relation to its parents. So multiple consolidation methods are established to facilitate consolidation and elimination rule which preset or configurable parameters including ownership, percentage, consolidation and minority interest, which is also known as NCI. So a control setting is also available to help determine the other setting for the methods, and the consolidation methods are then applied to the consolidating parent entity and its hierarchical descendant during the execution of consolidation, adjustment and elimination rules. So you need to define the ownership and consolidation percentage and calculate NCI. Minority interest calculated when there is holding and subsidiary relationship, and consolidation percent, suppose there is less than 50%, then equity method, you can use equity method, and how much ownership it done, and change in ownership can be verified. That will we do in our application and I will tell you. So first let's us understand what is holding method. So the holding method is applied to the legal entity for which its immediate parent represents the consolidated result of that legal entity. The holding method always applied an ownership of 100%. So only on 100% ownership this method is applied, and a consolidation percent of 100% control is theirs. There could only be one holding method entity for each parent entity. So for subsidiary method, it is applied to entities owned by the holding company and for which the holding company exercises control, and this is the rule. The ownership percent of for subsidiary company generally ranges from 50% to 100%. So 50% ownership will be there, or in subsidiary method it should be more than 51%. In general it is said the holding company must have shares more than 51%. So control is yes, and the consolidation percentage is therefore 100%. Minority interest, which is also known as NCI, equals to 100% minus the ownership percentage. And another method is which ranges from 20 to 50% ownership, which is equity method. The equity method is applied to a legal entities owned by the holding company and for which the holding company exercises significant influence but not control. So the ownership percent of an equity company generally ranges from 20% to 50%, and control is no, and the consolidation percent is therefore 0%. So minority interest also equals to 0%, as there is no ownership and there is no need to prepare this consolidation. You will just follow the equity method that I will show you. So first let's move on to our application. So let's just try to know what should be our first step. First step should be to create an entity. Okay, this is my sheet that I want to show you for January and February as well. This is I have prepared already. So our one company name is H Ltd and another one is S Ltd. So H Ltd is a holding company and S Ltd is a subsidiary company. This is our consolidation statement which I have prepared overhead. These are the accounts that I have taken, equity, common stock and all. liabilities including this is the calculation of goodwill I have done. Investment is 70,000 and net asset is this 64,000. It's minus result as 6,000. HLTD retained earning is 62,000. Share in sub is 36,000 totals to 98,000. And here minority interest is calculated. Total retained earning is 45,000. Holding share is 36,000. MII is 9,000. Common stock is 16,000 and totals to 25,000. So yeah, this is the calculation part. I have taken these accounts as you can see, and investment in sub is 70,000. Okay, and so I will just enter these amount into our input sheet. First let me create these two companies and give a intercompany relationship and ownership, and will define ownership. Let me show you calculation of February. Here the ownership is changed. This is not 40, it's 60. You can do it 40 as well. $40 will be when equity method we will follow. I will tell you. First time telling you how you can change in ownership, which will mean substitute to associate you can say, or there is change in ownership by period. So in January there was a investment, sorry, not investment, ownership of 80%, and in February it is 60%. So 60% there is change in ownership by, you can say 20% is reduced. So we will see in our application how you can do this in our application, and let's just do a first step, which is to create a entity. So let me first create the entity. I'll create the entity over here under CT. I'll just create the sibling of it. For now, first I need to create a C-level one. What should I name the consolidated one? HLTD. Okay, MLTD is the C-level company. And MLTD, okay, it should be ignored. Okay, everything is fine, I believe. Never share. Okay, save it. So I'm saving this. Okay, so I will now create a holding company which is HLTD, and ignore. From here we will not define the ownership, we will just create the entity, and in attribute I need to click over here intercompany entity. Yes, it's a ICP entity. I click over here add, still not added. I'll click over again. Now it's added. Let me see the member formula for it. Never share. Okay, it's correct. Okay, here it is ignored, and yes, I've added. I'll just click over save. Okay, So I'll just create the sibling of it, which will be my subsidiary company. Okay, so HLTD and SLTD is done. So I'll refresh the database. Let's refresh it. So it's take a little bit of while. Cube is still refreshing. Okay, it's take a little bit of time, but it is a necessary practice. Don't know, it's taking a too much time. Let's run it, let it run in background. So let's move on to our ownerships and see whether our entity is visible or not. I'll just move on to our overview. Not sorry, overview, it should be consolidation. Okay, let's see our entity. Under it is under corporate company hierarchy. Here you can see our entity is over here. So one entity, okay, let's define the period as well, which is January 15 and actual scenario. Yes, it's correct. Okay, so this is my holding company. I want to make this company as a holding, so I will click over a holding, yeah, with 100%. And for, okay, let me show you. Now in January it is, the ownership is of 80%, so I'll define over here 80%. Okay, and let's save this changes. Okay, so after the changes has took place, now I will recompute ownership data. actual year is correct, start period is correct. Recompute it. And the computation is successful. Okay, so now I will just do a calculation part in January. This is my January calculation part. Here investment is done, it is calculated for 80% ownership, and now I'll just click over here and create a which input sheet. So account that I needed I have entered over here already. You can give the POVs, and now scenario you can choose which is actual. It is not connected, sheet is not connected, but as you can see these are things you need to take. And suppose this is our H Ltd and this is our S Ltd, which is a subsidiary company, and this is our M Ltd. H Ltd and S Ltd. and S Ltd. This is the ICP company, S Ltd. Okay, so here it is. Here you can see these are the account. I've entered data: cash 20,000, 50,000. From here you can see this cash where it is 20,000, 5,000. Okay, so I've entered investment in sub as well in this 70,000, and this also machinery and equipment, which is a, and also I see the short-term receivables and all the data is already added. And this is the output that we get from it. As you can see, the output total data source. Now you need to change the POVs here for to get the output. It should be total data source, and the period must view must be periodic, and gap should be local gap, and it should be viewed on consolidation must be on entity total, and intercompany must be of intercompany top, and there is no product. And let me change the name. This is our consolidation entity, which is also known as C level, or you can say imaginary entity, on which you will see the consolidation. H Ltd is our holding company, and this is our subsidiary company, which is S Ltd. So S Ltd, and so this is our consolidation result. Balance is 0, nil. Total assets and total liabilities are equal, and this is our consolidation. Goodwill is 6,000. Let me see goodwill is whether 6,000 or not. Yes, it is 6,000. And as you can see, minority interest 25,000. Yes, minority interest is 25,000. Okay, output January calculation in February and input Feb. So now we will move on to our next step, that is change in ownership. It's changed to 60%, and okay, I will tell of 60% as well. This is our balance sheet that I have created. As you can see, there is change in ownership and also accounts for this, and common stock and all are taken over here also. And opening goodwill is 6,000. Investment into sub, it will be deducted. 20% is the difference, so 20 minus 20,000. Investment in sub reduced, which was 50,000 earlier. so yes, 20%. And net asset of S Ltd on January 15, you can say 50,000. So goodwill is now 36,000. Retained earning is H Ltd opening retained earning 98,000. H Ltd current earning is 30,000 and S Ltd current earning is 8,000. Totals to 136,000. So opening investment is 70,000. Withdrawal of investment, there is a withdrawal, so I will withdraw the investment, which is minus 20,000. Investment in equity co-income is 8,000. So this will be total, I think, yes, this is of 40%. And okay, this is the calculation form. This is for equity method, as you can see, investment in equity company, and this is for 60%. This is our main. In this you will see 60%. And similarly you can see this property and goodwill is calculated 64,000. yes, 80, okay, all of these are I have taken from earlier. Total goodwill is now 11,000. Investment into subsidy and net asset of SL3 January 19 is 25,000. Investment into subsidy is reduced by 20,000. Goodwill on February 19 is 5,000. So this is the opening balance. Retained earning 60% of retained earning, now it's 60%. Net asset of SLT is 1,45,000. 40% of minority interest, which is 58,000. So because minority interest will increase now, as it was earlier 20% only when there was ownership of 80% of holding company. Now it's 60, so minority interest will be of 40%, as you can see. So this is for 60%, this is for 40%, that I will also show you. So this is our input sheet. I have entered data accordingly. So investment is reduced, so I'll just click minus 20,000, and some revenue was there, so I've entered those, and this is the output. But to get this result, first we need to define the ownership in our application as well for February month. So I'll click over here, February. February is now this. Holding 100%, 80, okay, yes. Okay, so you can see ownership here, it is on February. Now there is change in our ownership, which should be 60%, so I'll click over 60 and save it. So system will calculate accordingly and you will get the result according to 60% in February. So save the changes and action is recompute ownership data. Yes, it's for February. Recompute it. Okay, it is successful. So this is how you will define the ownership over here, and it should be subsidiary still, as there is 60% ownership. It will still can be subsidiary company. If it less than 50%, then you will get other method as well that I will tell you. So let's just see for 60% first, then we will move on to our 40%. So calculation is this over here. 60% input is done, output you will get this result. So 45,000, yeah, it's correct. Let me see in calculation. Yes, in this 45,000, 40, not 45,000, 4 lakh 57,000, 57,000, yes. Okay, total assets and total liabilities are equal in this. Okay, and let's see our goodwill, where it is. Goodwill is 11,000. Okay, let me see whether our goodwill is 11,000 or yes, it's 11,000. Okay, minority interest 58,000. This will system will calculate this automatically as you have defined the change in percentage. So 6,000, 12,000 is over here. As you can see, output in February in details. This is in details. Okay, so output in February, as you can see, this. So this is how you get the correct result in our sheet by defining the ownership. But first, to see the consolidation, you also need to run a consolidation rule as well, from where you can run the rules. From here you will get the result only when the consolidation rule is run. So click over here and launch the consolidation. First I will launch it for the period January, and then I will launch it for the period February. Launch this, enter the company name as well, which is M Ltd. Okay, let me just choose it from here. Under this is my C-level company. Okay, scenario is actual and enter here, launch it. So after launching this consolidation rule, you will get the output for January and consolidation statement for the period January. And when you will run a consolidation rule for February with 60% now, earlier it was 80%, now it is 60% in February. So okay, change the period, which is February now. Just click over here and launch this. Now the consolidation rule was run successfully. So now let's just move on to our equity method, which is also similar that I have told you in this case, and which is 80 to 60%. Now the suppose 80 to, for equity method it 80 to 40%. So suppose in this calculation it is 80%, which is calculated, and this is our earlier sheet. And now in calculation of this equity method, this is, you can see, for equity method. So in equity method, retained earning is taken profit only. If there is no ownership, so no goodwill, no minority is there. For 40%, and so you will, how you will do that? So for 40% you need to take those things, mostly this is CFS showing over here, and this is how you will do the withdrawal calculation part also you can do. But this is not for 40%, but how can you do for it 40%? You'll just go over here and define an ownership. So for the, let me show for January first. Okay, for January it is this. Click on this or arrow, and which is 80%, it is correct. Holding and subsidy, you can save and action, but it is already correct. I am moving on to February. There is change ownership. Now you will follow equity method because it is less than 50% ownership, so you will define 40% and you will see you will not get the subsidy over here. As you can see, equity is over here. These are the methods that you can follow now, not subsidy, because for subsidy you need to have 50 more than 50%. Now it's 40%, so you will do only follow equity method. And equity method, I have told you that it's calculate only profit as there is no ownership. The equity method is applied to a legal entities owned by the holding company and for which the holding company exercise significant influence but not control. So there is no control in equity method. It generally ranges from 0 to 20 to 50%, and there is no minority percent, 0% minority, no consolidation, 0%, and as you can see, yes, no minority interest as there is no ownership. So from here you can change the to 40% and you will get the result according to equity method. So these were the topics for change in ownership and equity. I hope you are able to understand how you can run the consolidation and this calculation part. This was very easy how you can connect the smart sheet. First you can create it by your own, this balance sheet, and January and February you have to create this, then input in January, do the data input over here, output, then you will get, after that you will run a consolidation and then you will get the output over here. POVs must be this in this calculation. Then part you will do input the data, investment is less, ownership will decrease, so you will minus 20,000. Output, run a consolidation, then you will get a output, define the ownership as well, 60%, and by consolidation over there. So this is how you can manage the ownership and follow different methods. This for change in ownership and all. And you will do similarly for equity method only, but you have to change it from 40% over here. You can, let me see, configuration, enable features, these are the features that you can enable at the time of creating applications. These are custom dimensions that you can name it. Okay, so okay, enter companies and addition. Okay, okay, can enable these features. Move on to overview part. So this is how you can run a consolidation. How you can select the account. You can select from member selection, and you need to for output input As you can see, the movement of investment in service, acquisition of companies and business input movement must be correct. For cash, it is changes in cash. And for revenue, it is changes in net income. And for common stock, the movement is changes due to issue of stock. And for this returning is closing, okay. But for short-term payables, it is changes in accounts payable. Movement must be defined correctly. And deferred tax, so for deferred income tax liability, it is the movement deferred income tax movement. And for current liabilities, I have taken changes in other current liabilities. uh, and closing, this I want to see total asset and total liability on closing. So POVs must be defined correctly. And for output, you can view on only closing. Output you can only view on closing. Here you can see I've done in this Feb for same for the this February month, also change in inventory. You can see in for inventories, inventory material changes in inventories, as you can see over here. And revenue domestic, changes in net income. So these are the POVs. And this for output, it is on closing. From here you can confirm whether the result is correct or not, whether it is balancing the figure or not. So I hope this video was informative. So thank you so much. So thank you so much.